Hey, what's up guys? John here. Hedge fund formations are the lowest they've been since 2008. And what that signals to me is this is probably the best time to raise money. This is probably the best time to start a business than we've ever seen. Because over the last 2 years, what did we see? We've seen a euphoria. People are making money left and right. People thought that they couldn't lose. They were investing in companies that they didn't even understand. They were buying memes. They were buying NFTs. They were buying all these hype cryptocurrencies that they couldn't themselves evaluate, right? They had no idea what the true value of these, investments were. They were just simply hoping someone else was going to come later down the line and buy it for more or a higher price than which they paid for it. That was the environment we were in. And now we are going into an environment where there's going to be a lot more fear. And inside of fear is opportunity for the smart and aspiring entrepreneur to grow and scale when everyone else is clamped down and afraid. I believe that we will never see an opportunity like what we are about to walk into in the rest of our lives. This is a once in a lifetime moment, once in a lifetime chance to really do something impactful, because there's going to be so much opportunity inside of all the fear. And in this video, I'm going to walk you through exactly what's going on. The billionaires, by the way, are crushing it one after the next, just like they always do. But the great wealth is made during the bear markets, not the bull markets. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's going on. New hedge fund formation falls the lowest since 2008. Persistent and mounting volatility in stocks, currencies, government bonds, credit, cryptos, and just about everything else has intensified fears among a generation of money managers entirely dependent on a Fed put. Though no such pivot has yet come to play yet this year, and the Federal Reserve is hell-bent on tightening financial conditions to combat the highest inflation in 40 years. When the Fed injects liquidity into capital markets, everyone is considered a genius. And that's exactly over the last 2 years. I've been saying, in 2021, Q3, Q4, I've been saying this is the height. All the smart people in the room, the Elon Musk, the Zuckerberg, the Sergey Brins, all of the billionaires, what were they doing? They were selling. What were the masses doing? They were buying. That makes very little sense. It makes very little sense. If the smartest people in the room are selling, probably want to ask yourself if you're smarter than them, or maybe you should be selling as well. And then now what we're walking into now is a lot of question marks in the housing market. A lot of change is coming. I think there's going to be big opportunity inside of the housing market and through that change. And right now they're saying they'll find out who's swimming naked, as Warren Buffett once said 2 decades ago. And there's a lot of real estate investors that are right now. They can't withstand a refinance from a 4% to an 8% mortgage if we end up going in that direction. Mortgage rates are headed there if we, unless we do a pivot. And for many unseasoned money managers, which there is a lot, who haven't traded yet in the mid-70s, late 80s, the dot-com bust or the GFC, it has been and the great financial crisis, it has been a one-way ticket up for them, and they only know one trading strategy: buy the dip. Perhaps the Fed-induced market turmoil this year, which has left every dip buyer deeply underwater, could be one of the reasons why new hedge fund launches in the second quarter were at the lowest levels they've been since the 2008 great financial crisis. Data from hedge fund research shows new hedge fund formations slid to only 80% from April to June, down significantly from 185 in the first quarter of the year. The last time hedge fund formations were this low was in 56 of the fourth quarter in 2008. During the quarter, there was 156 hedge fund liquidations, 24% increase from the prior quarter. The total number of hedge fund declines to 9,237 in the second quarter from 9,313 in the first. It was in May when we were told that readers in the 2022 had been the worst year ever for hedge funds. Melvin Capital was one of the most recently followed hedge fund closures during the quarter. HFR data shows market turmoil in the year's first half resulted in $7.7 billion in net outflows across the hedge fund industry. Even with firms going bust and fund formations at decade lows, hedge fund managers to outperform the broad equity index. But that's not just this. This is going to happen with a lot of unseasoned money, a lot of unseasoned managers. They're going to just continue to get wiped out. But you look at Citadel. Citadel's up 29%. They're up 29%, and because they have a strategy. They obviously are operating at a higher capacity than most of these other funds. You look at Carl Icahn, for example. He had a $500 million stake in Twitter, and he made roughly $200 roughly $250 million he made on that Twitter trade. And then you look at John Castellantis, the supermarket mogul, supermarket billionaire, real estate billionaire. He bought an 87-acre Westchester estate for a song. He paid $5 million for this property. $5 million for this property, and it was on the market for $27.5 million as recent as 2012. Look at this property. Look at this property. $5 million he paid for this, bought it out of bankruptcy. It's absolutely incredible. And this is the power of sitting on cash when everyone else is getting heavily leveraged, just spending, and speculating on things they don't understand. He's going to pick this property up for $5 million, probably do a gut rehab on the interior, really fix this property up. And it's sitting on 87 acres right off of the water. I mean, that library is absolutely beautiful. But he bought this for $5 million bucks, right? You think about what's going to happen. All these hedge funds are going to be created. All these investment vehicles are going to be created, and they're going to buy up properties left and right. This has a basketball court as well. I mean, tennis court, everything. Look at that. That's absolutely just beautiful. Absolutely beautiful. That's what the smart money is doing. The smart money is putting themselves in a strong position financially right now. They are raising money. They're getting ready to raise money if they have not yet already. And they're putting themselves in a place to multiply wealth, because that is the moment that you want to do it, when things start to really buckle. And it looks like that is happening right now. I believe we're going to start to see more and more hedge funds that are heavily leveraged buckle. We're going to see a lot of investors, these house flippers and Airbnb experts and all these people start to go out of business. And all that is just going to be more and more opportunity. Because what's going to happen? People are going to look at who did really well in the bad times. And a lot of the gurus, a lot of the people on social media that were talking about all the money that they were making, if we step into a situation where we're walking into like a great recession or maybe even depression, those gurus are going to go away. Most people are going to say, you know what, you can't trust that. That person, they just made money in the good times. But when you look at people like Carl Icahns, like the Ken Griffins, like the John Castellantis, you look at the billionaires and the really smart and savvy investors, you will see a gradual increase in their wealth historically over time. And the reason for that is because they invest solely on value. They don't get, the mania. The mania doesn't get to them. They don't get extremely excited just because everyone in the room is excited. They're making smart and calculated bets. And soon, those bets are going to be easier and easier to win. What do you think about this entire situation? Hedge funds, lowest formation since 2008. Interest rates are rising. Stocks are really coming down. Jobs are getting ready for massive layoffs. Roughly half of all employers are getting ready for layoffs. We're seeing all this change. And during that change, a huge block of wealth is going to be transferred. It's going to be transferred to smart and savvy investors. Drop your comments below. Let's have a conversation about this. Hit the like button. Subscribe here. Subscribe also to my second channel. It's an interactive call-in show and a podcast. And LinkedIn, Twitter, Instagram, and TikTok up in the banner. If you need help fixing your credit, we would love to help you. You can call us at 561-430-5900. You can sign up online. It's a free consultation. So if you sign up online, your card will not be charged for 5 days. You will get onboarded. During that onboarding call, we will talk to you and see, Erica will speak with you and see exactly how we could help you and come up with a full game plan and roadmap. And at that time, when we decide that we're going to move forward, everyone decides, then your card would be charged. You'll be able to watch and experience the entire process from a dashboard. You'll be able to read the letters, the dispute letters that are going out to the credit company. Like you'll have full transparency throughout the entire process with incredible customer service at CashNow.Video. If you would like to make money online from home working 1 hour a day, you can go to CashNow.Video/money and then join the Discord channel. Start at the Start Here tab and you follow the steps and you'll be fully brought up to speed. We have calls Monday through Friday at 12 p.m. Eastern with me via Zoom where we go through everything. Catch you guys in the next video.